loading. Just give it another moment. There's still quite a lot of people coming on board. Andrew Sangster, I think I saw Andrew.
I'm here, Roddy. Ready when you are.
Excellent, good. I think I might ask Sonia to go first, if that's all right with you, Andrew.
Of course,
give us an
no
update
problem.
on the insurance sector and what's happening there. Just sorry, give me another moment. There are a few laggards who are still coming on stream. And then we will crack on.
Morning, Roddy.
Right. Good morning. Okay, I think we will crack on. There are still people joining the call, but I'll let them in as they arrive. Could everybody perhaps put themselves on mute if they're not on mute, just so we can get rid of any extraneous background noise? Welcome and good morning to everybody. Lovely to see so many of you once again. It gives me huge pleasure today to welcome back Sonia Campbell, who is partner with Mishcon Reya, who has been leading the class action on behalf of the hospitality sector against the insurance sector in relation to business interruption. Sonia joined us a couple of months ago to tell us what the plan was, and she's got some very good news for us today. So I'm going to hand over to Sonia in just a moment. We're then going to hear from Andrew Sangster, Managing Director of Hotel Analyst, who's going to give us his views as to what the next year and the next months may hold for all of us in the hotel sector in particular. And finally, I'm delighted to welcome back Billy McNeil, who's going to talk to us about the new Tourism and Hospitality Talent Development Program, which is just being launched. So we've got a full program for the day. So without further ado, let me hand it over to Sonia. And in the normal form, if anybody's got any questions, please just drop them into the chat box, and I will pick them up and pose them to Sonia. So welcome back, Sonia. I've lost you. I can't see where you are, but I know you're there somewhere.
Yeah.
Thank you again for joining us. And if I may, I will hand the floor to you.
Sure. Okay, well, thank you for having me back to speak. And as you say, it is with some good news for a change. Yeah. I think that most people will be aware of the FCA test case, which has been proceeding in the court since June. But as you'll know, there was a hearing in July and August, following which we had the first instance decision of the High Court on the 15th of September. Thereafter, there were a number of appeals by different insurers against various aspects of that High Court judgment and by the FCA in respect of a number of issues, more limited, but still on appeal. The process was unusual and expedited, so rather than appealing to the Court of Appeal, there was a leapfrog process, which meant that the appeal was heard directly by the Supreme Court. That hearing took place in November, and the judgment was handed down on Friday. The judgment really is a resounding success for policyholders overall, because what it means is that if you have business interruption insurance cover, which is a non-damage cover, and usually you find those in your extensions to cover. So it's not reliant or contingent on there being property damage, physical property damage. Then you may well have cover for pandemic-related losses. So the usual clauses that you'd be looking for are disease clauses, or prevention of access, denial of access, or sometimes they're called hybrid clauses. And hybrid clauses are ones which have elements of disease and maybe public authority action in them, where you have to satisfy more elements to show that you have cover under your insurance. In terms of businesses that it's likely to impact, obviously the types of insurance clauses that you'd be looking for, anybody with insurance with the particular insurers who are party to the test case should be considering their insurance. Businesses insured with other insurers may well also be covered. You need to have a look at your insuring clauses and your cover as against the FCA website, where there are a whole range of the clauses set out. If you think you have similar clauses or similar cover, you should be contacting your broker anyway, or your insurer, and asking if there's cover. They should really be contacting you following this judgment. But I don't know how long that will take and how swift their contact will be, because they will have to contact thousands of policyholders. So you may want to take it into your own hands and make initial contact to see if you have cover. If you think you have cover, but you're not getting the right responses from brokers or insurers, then by all means you can reach out to Roddy or to us directly, and we can try and provide with some guidance. What it means for policyholders is that if you've made a claim under your business interruption policy during the policy period and you've notified that claim, most likely it will have been on hold, with insurers or brokers telling you that either adjusters will be appointed but do very little pending the outcome of the case, or that the insurers are waiting for the result of the case, which is now obviously clear. Where you will find, or what we're finding, is a lot of insureds think they have cover because they have a disease clause or a prevention of access clause, but you have to look out for a couple of things really. There's no cover if you have a prevention of access or denial of access clause, which says that there has to be damage to property in the vicinity, because COVID doesn't cause physical damage, loss or destruction to property near your insured premises. And if your cover is dependent on there being physical damage under one of those prevention of access clauses, it's unlikely that you'd have cover. And for the disease clauses, many of them do offer cover, and they may say something like outbreak of a notifiable disease within a specified radius. You then have to look at your definition of notifiable disease. And in many cases, it's very broad. It will say, any outbreak of a disease, a human infectious or human contagious disease, excluding AIDS or AIDS-related conditions. It may have a list of diseases, but then have a separate clause that says any disease added or designated as a notifiable disease pursuant to the 2010 health regulations. That would be broad enough to bring in COVID. If, however, you just have a notifiable disease definition that lists diseases, it won't include COVID, because COVID probably wasn't around when you took your insurance, but you can check, and there's no cover for COVID now anyway in renewals. But if it's a specified list, those are the only diseases that are covered under your insurance. So if it's not a broader disease clause, again, it's unlikely that you'd have cover. But we are advising very many policyholders who do have cover. We're also revisiting claims where there wasn't cover following the High Court judgment, but in light of the Supreme Court judgment, there is cover. And examples of that are QBE 2 and 3. So Mishcon represented two groups of one was the Hiscox group, and the other one was Hospitality Insurance Group Action. And for the latter, we were bringing claims against QBE under 3 policies. And at first instance, the High Court found there was cover under QBE 1, but that there wasn't cover under QBE 2 and 3, because they focused on a particular word, event, and incident. That's now been reversed. So if you have a QBE1 or 3 disease wording, you should have cover. And so we are contacting lots of policyholders, and they're contacting us to say, do we now have cover? And the answer is yes, for those policies you do. And if policyholders are concerned about the fact that maybe they haven't notified their claim in time and their policy is now expired and their new policies won't cover COVID because that will almost in all circumstances be excluded unless there's been a mistake. It's not too late, in my view, to notify a claim now, and that's because the FCA issued finalised guidance in June, which effectively is a standstill of time between the 17th of June and the handing down of the final decision, which was only on Friday, which means that any steps that needed to be taken by policyholders in terms of making claims or doing things in relation to their insurance are frozen. And I think you can now notify and say, in light of the judgment on Friday, here's our claim. So if you're in that position, I wouldn't despair and just think, oh my gosh, we have no cover. I would still be saying to your broker and the insurer, here's our claim. The other thing is, if you do think you have cover, we are pursuing damages for late payment under the Enterprise Act, because we say that these claims should have been paid many, many months ago, and it's not an excuse for insurers to say, well, we were disputing this through the courts. So there are those elements, and your policies may also cover assessor costs and claim preparation costs and those sorts of issues. So do look at your policies carefully, and if you need some guidance, then obviously we are here. You just might have to be a bit patient because we're receiving lots of inquiries, but we will come back to you if you need some help. Roddy, I don't know whether that's enough of an update on the case. I'm sure people don't want to hear the intricacies of the legal reasoning, but if people have any questions, I'm happy to take them now or after this session.
Thank you very much indeed for that, Sonia. A couple of questions. Obviously, the Supreme Court has given its decision. Is there any right of appeal, or is there likely to be any appeal, or is that it?
There we are. No appeal. That's the end of the road. That's it. So we have all the clarity. No more appeals. There will be arguments, I think, now over furlough and grants that businesses have received. Some insurers are saying those grants have to be repaid. We will be taking the position that they shouldn't be repaid. Why should insurers benefit from payments by the government? Insurers, no doubt, are saying double recovery. So those arguments haven't been decided by the Supreme Court and will be subject to further argument, but they will be debated in due course. So I don't think that policyholders should be conceding those points at this stage.
And
I've just seen
there appeared to be one. Sorry, go on, Sonia.
Just seen a question about who was funding the action. The action was funded by Harbour, who are a third-party litigation funder. And when we, in terms of backstory, the way this all came about was I was actually interviewing at work Sir Rocco Forte for one of our academy sessions. Before the session started, we were sitting there on a little stage, and I was talking to him about the pandemic in Italy because it had started there before, and asked him about his insurance, and he said, oh, I'm not sure that they'd cover under insurance for this. So I had a look at it, and it led me to think, well, actually, we should be looking at many more policies to see whether lots of businesses have cover. And that's how the idea of bringing together a group claim came about, because the limits are often very low relatively in terms of trying to bring a legal action against insurers. If you've got 100,000 or 50,000 or 250,000, you're not going to bring a legal claim, which would cost millions. So we went to Harbour very quickly. They were so flexible. We did business cases, got funding in place very quickly, and started to build a group to say, these are the insurers that we're looking at, and if you want your reviews done, come to us and we'll do them for free. And Harbour funded all of that, actually. And so we are still being funded by Harbour, and we're still considering next steps. But I'm hoping that the insurers will now pay in light of this decision. Certainly for the clients that we're dealing with, they should be covered now. That was a long way of saying Harbour are our funder on these claims.
Thank you. There appeared to be a number of the insurance companies who have been somewhat recalcitrant. I'm thinking specifically of NFU Mutual, who've basically put a statement up on their website, which basically says, you know, forget it. And I think Zurich are perhaps in the same sort of category. Are they going to have to reconsider their position?
Yeah, I think I looked at a sample from you, Roddy, yesterday. I didn't have the policy, but I just looked at the clause that was in the letter. And it seems to me, I mean, we have to look at every policy wording because there are endorsements that change things and quirks in different policies that might mean different things. But, you know, the one I looked at yesterday had cover in it. It wasn't saying there's no cover for reasons that I would think, you know, it's excluded by some reason. What they were saying was you have to meet all of these requirements and you can't do that. Well, actually, in light of the Supreme Court judgment, those requirements are met. And for disease, you have to show that there was a case, an individual suffering or sustained illness resulting from COVID within your radius. So if you have a 5-mile radius or a 1-mile radius, or 250 meters, the principle is the same. And if you're, you know, in a populated area in central London, in Dover Street, and you have a wine bar, then it's very likely that within 250 meters, there will have been somebody with sustained illness from COVID. That's enough to trigger that disease clause. And the court has also been very robust in terms of looking at pre-trigger losses. So there are certain dates where you say, well, that's government action. They've said that restrictions imposed can include government instructions, orders to close your businesses, which weren't capable of being enforced by legislation at that time. They will be regarded as triggers. So the other thing that we are looking at in terms of maximising claims is how many times you can claim. So if you have wording in your limit that says in the aggregate, it's basically a total cap. So if it says 250 each and every occurrence, 250,000 each and every occurrence, 500,000 in the aggregate, it's likely that you will be able to claim 500,000 in total if you have a number of premises or per occurrence, which is potentially per lockdown, per instruction, depending on your clauses. In some cases, you can claim under 2 heads, so maybe under disease and prevention of access, and you might only be able to claim under disease 1, 2, 3 times, it depends on the wording, but under prevention of access, you may be able to claim multiple times, and therefore, you know, you'd be saying every instruction was a separate occurrence in light of this judgment. So we are multiplying our claim limits. So there's lots of things to look at. Those are the issues that I think the insurers will now fight because they are on the hook, and they're going to be looking at ways to reduce their losses. So that's where we are.
It's interesting that you mentioned that, Sonia, because actually there was a question in the inbox here from James Page who was saying, was it possible to claim under both the denial of access and public authority shutdown? So the answer to that is clearly yes.
It depends on your wording, Roddy, but yes, some of the clients I'm dealing with, we are doing that. Some policies will say you can, you know, there might be a clause in there that says you can only claim under 1 head of loss, and you know, it can be the maximum head, but you can't claim under 2. Some don't say that, and then the argument is open for you to claim under more than 1 head.
Thank you. There's a question here. You mentioned the possible claim for opportunity to claim for damages for a sort of late payment penalty. How does that generally get calculated? That's Greville Dare from the Petersham Hotel was interested to know.
I don't know is the answer, because there is a provision in the Insurance Act 2015 which allows you to claim damages for late payment of insurance claims. That provision has not been widely used and certainly not publicised in any way, and it hasn't been used in a case like this yet. However, I think that the Supreme Court judgment paves the way for making those claims and is a prime candidate for saying these claims should have been paid to businesses who are on their knees and struggling back in March, and some, 10 months later, we're down the road, you're sitting on money that should have been paid, and now you are legally liable to pay those claims, so you should have, you should pay damages. So, for example, businesses are paying bank interest and other interest on other loans and things. They wouldn't have had to have done that if these claims have been paid many months ago, or if interim payments have been made, or payments on account. And lots of these policies have provisions that say you can get advance payments in the event of loss. So that's the next stage in terms of what we're going to be looking at. How it's going to be calculated, I don't yet know. I think that adjusters will be appointed by the insurers. If you're not happy with that, there may be provisions that allow you to claim under your policy, because liability is now in place to appoint loss assessors, and their claims may be covered by the insurance. So loss assessors are obviously going to be working for you rather than the insurer, or appointed by the insurer. And so in a sense, they should be neutral, but you may find that a loss assessor will work more closely with you in terms of trying to maximise your claim.
I mean, clearly, an awful lot of this comes down to the wording in the individual policies. I mean, in terms of people trying to establish whether their policy will cover them or not, I assume that the best thing they can do is talk to their broker. Is that correct?
Yeah, I mean, I think, as I said at the beginning, you have to have a look at your policy and see, there's normally property policy. So section 1 is normally property damage, not always, but generally. And then section 2 is normally business interruption. And it will say things like fire, flood, etc. And it will talk about business interruption in connection with those insured perils, but they are physical losses, fire, flood, break-ins and things. Then it will normally have a subsection that says extensions to cover under section 2, under business interruption. And it's there you need to look. And things like the clauses you want to look at are not bunched together. So it will say something like public authority, or disease, or infectious disease, or murder, suicide and disease, or denial of access, prevention of access, public authority action. It will something like that. You just need to have a look at those clauses. If they say, as I say, if there's a specified list and nothing more for diseases, you may not have cover. If there is a clause that says you will have cover, you've been prevented from accessing your premises or denied access, and your business has been interrupted with as a result of damage to property in the vicinity or within 5 miles, likely to be no cover. Because if there's damage with a capital D in your clause, it means you need to have physical damage within your area that's caused your access being interrupted to your premises. But if you don't have that physical damage contingency, and if you don't have just a specified list of diseases, you have a broader disease clause, then I think you should be arguing that you have cover. And if you're not happy with what the broker or insurers say, then you should check, because it could make a big difference.
Yeah. Final question for you, Sonia. Question, can hotels only claim for any period of closure forced by lockdown?
Can they only claim for periods of closure?
Yeah, can they only claim for periods when they've actually had to close because of lockdown, or can they claim for loss of business due to their business being impacted because of restrictions imposed in, for example, other parts of the country?
The latter. So what the court has decided is that all of the cases, all of the individual cases of the disease were equally effective causes, which led the government to take the measures that it took and is still taking. And so when it comes to what you claim, there is a provision within the judgment that talks about pre-trigger losses. And so that is designed to look at when it comes to quantification of your claim can't be reduced by looking at a reduction in your business profitability, say in February, even even though the instructions weren't given, say, by the Prime Minister until the 20th of March, because that run up to that March instruction was because of cases and people being told about social distancing and washing hands and trying to avoid social contact and mass gatherings, and all of that was coming out was an impact, and people were not going out as much. That can't be taken into account in quantifying your claim, and the insurers can't reduce your claim taking that into account. So what they look at is the results of your business, stripping out all COVID. So you pretend that COVID was never in the country, never here, and there were no effects, and your business was operating normally. How is it operating then? How is it operating now? So those are things you look at. So yes, you can look at the effect of other instructions and government advice to try to say that they had an effect on your business, and that's taken into account.
Lovely. Sonia, thank you very much. I suspect there are a few people on the call with other burning questions. I mean, if they're channeled through me, are you happy for me to pass on any other questions to you that may arise?
Yeah, absolutely. Either through you, Roddy, or your inbox. I think last time you circulated my email, but my email is on the Mishcon website, or if you type into Google, it should come up with something. So you can email me, and if you mention you're on this call, what will happen, just so everybody knows who does inquire, is I'll circulate it to our team, and we will add you to our list to come back to you. But what we will need to do to advise you is see your policy schedule and wording. We won't be able to give you any advice without that.
Perfect. That's incredibly kind, Sonia. You're obviously a busy lady at the moment, so it's all the more appreciated that you've taken the time out to join us again. So thank you very, very much indeed. And if I may, I will circulate your email address, and I'm sure one or two people may get in touch with you. I don't know if you need to dash off. I suspect you probably do. But if you want to hang on, you might hear from some very erudite chaps as to what the future of the hotel sector holds for us all. But entirely your call. But thank you so much, Sonia. That's been incredibly helpful and very insightful.
All right. Thank you. Bye-bye.
All the very best. Take care. So I'd now like to turn briefly, and I'll emphasize the word briefly, to Billy McNeil, who's going to quickly tell us about the new Tourism and Hospitality Talent Development Program before we turn to Andrew Sangster. So Billy, are you there? And can I give you a couple of minutes just to tell us a little bit about the new program?
Yep, thank you, Roddy, and good morning to everybody. This will literally be 2 or 3 minutes. It's more of a signpost to this initiative than anything else, and I'd also like to think that it's continuing with some positive news on the back of Sonia. David Cochrane and Mark Crothall were planning to be on the call today, but unfortunately both had to be called away to meetings, and both pass on their apologies. But I'm, as a corporate sponsor with Hit Scotland and a STA patron, I'm delighted to share some of these the details with you, and specifically the development program that Roddy mentioned earlier on, that has been created by Hit Scotland, but very much supported by the STA and also Scottish Government, funded very much by the Scottish Government. So I'm literally just going to take 2 or 3 minutes just to outline a little bit of background to it, some of the features and some of the criteria. However, my understanding, Roddy, is you'll send a link after the call to everybody. It'll be a link directly to the Hit Scotland website that will give you the full criteria and the full details. I just wanted to pull out some of the key details today, as I said, more just to signpost you and give you some of the high level details. So very quickly, a bit of background. Most of the people on this call, if not everybody on this call, will be familiar with Hit Scotland, the amazing events, funding raising events that they do, but also specifically the physical scholarships that they give out every year. And it's normally around about this time that they hold their Emerging Talent Conference, where they, as I said, physically hand out the scholarships. And of course, through two obvious reasons, none of the events have been taking place, and also the physical handing of the scholarships will not take place this year as well. However, this initiative is designed to apply the scholarships virtually. And I think, like most people in hospitality, there's a recognition that when hospitality bounces back, there will be a focus on not only keeping people within the hospitality industry, but bringing people back into the hospitality industry, but also introducing new people into the hospitality industry as well. So this is very much focused on retention and bringing people back. So very quickly, some of the key features of it. Roddy did mention the name of it. So it is called the Tourism and Hospitality Talent Development Program. It's going to be available for up to 1,000 people, so 1,000 scholarships. So if you're successful, that will in effect be your scholarship. It is going to be a virtual online development program, which is going to focus on 3 key areas, which will be leadership, management, and supervision. It's going to kick off the middle of February, and for each successful scholarship scholar day, it will run for about 10 weeks. In fact, not about, it will be 10 weeks. So 10 modules each week, and I think each module runs for about 4 hours. They've got 25 tutors from across Europe involved in this, so it will be highly interactive. One key date, if I could mention at this point so I don't forget, is that the cutoff for applications is going to be the 5th of February. So if this is something that you or you know of your employees or anybody that you know of, then that's the key dates to get into it. Also open to anybody, so really from students right through to senior leadership roles as well. And some of the criteria, and again, I would encourage you to click on the link because the criteria goes into a lot more detail than I will go into just now. But just to cover some of the high level details, it does apply to anybody who is on furlough or potentially part-time furlough, or indeed anybody who has been made redundant as part of COVID and intending to come back into hospitality as well. It is, because it's Scottish based and it's governed and it's funded by Scottish government, it is primarily focusing on Scottish hospitality. So one of the criteria is you need to be in the Scottish hospitality area to apply for the scholarships. If there's any key questions that you have specifically, then David Cochrane is more than happy to take any emails from anybody. Roddy, again, I think you could pass David Cochrane's email around after this call if need be. So I don't really want to go into any more depth, Roddy. I want to keep it really short and sweet, so to speak, and it's more just to signpost it. Is that okay, Roddy, or do you want me to do
perfect? Yeah, perfect. And I will I'll send around the flyer in the follow-up email, and I'll put in David Cochrane's email address as well. And anybody who wants further information can contact David directly or go to the HIP website. Billy, thank you very much indeed. That's very much appreciated. Right. Now, if I may, I'd like to turn to Andrew Sangster, who's been waiting patiently on his beach with his palm trees in the background. Andrew, welcome. It's the first time you've joined us, and we're very grateful to you for giving us your time. For those of you that don't know Andrew, and I'm sure he really doesn't need much introduction, he's the Managing Director of Hotel Analyst. He's a very highly regarded analyst of the hotel sector, and probably has more sense about the direction of travel for our industry than most people. So Andrew, without further ado, I'm just going to hand the baton to you. Please do share some of your thoughts with us. I've got some questions up my sleeve, which I will put to you, but I suspect that we may run out of time, but over to you, if I may.
Sure, Roddy, any chance I can screen share? I should have alerted you.
Certainly can. Yeah. Hold on. Wait a moment. Multiple. There we go.
Let's have a look. Oh, there.
Get rid of that. You should be able to now.
There we go. Let me just kick in at the beginning of this. Where are we? Slideshow, that's what I want. Right, thank you very much, Roddy, and hello, everybody. So the next 20 minutes or so, I'm going to be talking about the year ahead, which is the topic Roddy's given me. Roddy's already introed me. Just for those that don't know Hotel Analyst, we provide subscription information to investors in the sector. They are typically institutional or institutional-like investors. We've been doing that, well, we'll be 18 years old in June. So a quick overview of what I'm going to be talking about, bird's eye view of the economy, how we see COVID as impacting on hospitality, deal flow, and a look at winners and losers. Now, you've probably heard a lot about recovery shapes. They're still uncertain, but what we do know is that the recession is very much K-shaped. We have winners on the upper bit of the K sticking out there. Obvious ones are online retail, the streaming services, things like Netflix, obvious winners. In real estate, it's warehousing. There's been a huge flow of cash into warehousing. Data warehousing, a more specialist division of that, is also likely to be a winner, I suggest. On the downs slope of the K, of course, unfortunately, is our sector and the broader, so is hospitality, travel and leisure. Retail, which is not grocery. Grocery retail is one of the winners, but non-grocery retail is a clear loser if it's offline. For many other sectors, if you imagine that K sort of going up, more heading towards the middle, that's probably where you're going to find something like manufacturing. This is, we're getting into those V shapes, U shapes, W shapes. This is from the Office for Budget Responsibility. This is from their November forecasts. Their upside scenario is already out of date. Unfortunately, we are in a W-shaped recession, a double-dip recession that's baked in, given the restrictions we're currently in. I'm more optimistic than the OBR is with its downside scenario. I think we'll have a W. I think we're going to be heading back up more quickly to that yellow line, back to something like a strong recovery. Now, at the beginning of this crisis at Hotel Analyst, we were very gloomy indeed. We saw what was the worst recession we'd had for 300 years, really sharp economic downturn. We saw the prospect of mass unemployment again. We thought there was going to be lasting scarring in the industry, and it was going to be a very difficult period indeed, the likes of which we probably hadn't seen since the Great Depression of the 1930s. However, we changed our mind. I think there are three key areas which have driven this optimism. The first is, frankly, we're just completely wrong about the unemployment level. It's going to be much better. We may avoid going into any sort of double-digit unemployment entirely. This is thanks to the huge government fiscal stimulus. And to be candid, I just didn't think we were going to see governments coming in to the extent they have done. Now, of course, this has created enormous government debt. We've got government debt we haven't seen since the Second World War. But that's tomorrow's problem. What it has stopped is a crash right now. So we're not going to go into the Great Depression. The second thing, which is a weird feature of this current recession, is just how personal balance sheets, how strong they are. Normally they're nibbled away, and people get poorer during a recession. For most people, this recession, they're actually better off. And on average, they're better off. Now, there's been some pain, some significant pain for a number of people, notably people in our sector, people who have lost their jobs. But on average, across the economy, net savings are ahead of where they were at the start of this recession. That means there's a pool of untapped demand waiting to be let loose. And this is the way it's going to be let loose. The third point, vaccines. And they have come in a way which is much more promising than many people thought possible. We're for the first time, we're genuinely ahead of expectations with vaccines. They come at the very start of the earliest possible moment we thought it was possible, and not just one. We have a whole series of vaccines now. The rollout in the UK is going phenomenally well. It's ahead of target. It's a very promising environment indeed. This cheered up the first vaccine announcement by Pfizer back at the beginning of November, hugely cheered up Goldman Sachs. They talked about a V-shaped recovery. I think the critical thing here is not to look at what's going on this year in terms of economic growth. It's that the fact that it's so sustained and goes into 2022. We have real momentum in terms of the recovery coming back now. It's a strong situation. I think actually we're probably going to be slightly down on this. The UK economists at Goldman Sachs have actually revised down their 2021 numbers, but they've revised up their 2022 numbers. This speaks to this momentum piece which is there in the economy right now. In terms of COVID and its impact on the world and on our sector in particular, I think there's a couple of ways you can think about this. You can think about it as being an accelerator of change, or you can think about it as being an instigator of change. Now, I'm, as you can see from the green tick, very much of the opinion that it's accelerated existing trends. So we've kind of had in 10 months what we might have expected to happen in 10 years. And it's sped that up. Now, what we have seen is this talk, everything has changed. I don't believe that. I think things are fundamentally going to come out of this pretty much as we were beforehand. There's a few tweaks here and there we'll talk about in a moment. But this is something, now, this man here, Brian Chesky, the CEO of Airbnb, he is the head of the most valuable hospitality company globally. So Airbnb's market capitalization is $100 billion US. It's overtaken the previous most important hospitality company. We can debate whether they're hospitality companies, which was Booking Holdings, about 86 billion market cap. Just to put this in perspective, Marriott, the world's biggest hotelier with 1.3 million hotel rooms, Airbnb is 2.5 times more valuable than Marriott. Hilton's 30 billion. Chesky spoke at a Reuters conference last week, and he said 4 things in terms of how he thought COVID has impacted. I disagree with him on all of them. I don't think travel has changed forever. He talked about a permanent diminishing of business travel. I don't believe that. We've heard this all before. I've been here when we've heard about video conferencing, how that was going to finish it. I simply don't buy that. And I think business travel is going to surprise on the upside. If we look at a lot of the forecasters and their numbers, SDR et al., they look at what's happened in the past. But in the past, we've had recessions which we've crawled out of. So if we think back to 2008, how slow GDP growth was coming out of that, we were barely getting over 1% in terms of GDP growth. But you just saw the slides there. We're talking 6, 7. This is like Chinese type economic growth we're about to go into. When companies look at that, they're going to say, look, I need to get a share of that. We're going to see business travel snap back. The thing that's going to slow that is the supply constraints, where the borders are open. Obviously, intercontinental travel, I think, is going to take at least to the end of this year to really come back in any meaningful sense and beyond. And airlines themselves are going to take a while. We've lost about 50% of the capacity. But that can come back relatively quickly. It takes 2 to 3 months to train the pilots. We've got to get them back in their simulators. Those routes can come back online. Cities no longer the focus, absolute nonsense. Urbanization is a trend which is just going to grow and grow. More meaningful travel, I think he's right about this. I think if you're an armchair psychologist, you will be very familiar with Maslow's hierarchy of needs. And at the top of that pyramid is self-actualization piece. That is where the best brands in hospitality are targeting right now. a data point looking at that. Accor, its pipeline of hotels, 25% are lifestyle hotels, very much targeting that top of the pyramid. But that's nothing to do with COVID. That was happening way before COVID and is just going to carry on. And it will be accelerated to an extent, but I think in the short term, if anything, COVID's brought us down the hierarchy of needs, looking at safety, security and cleanliness, that kind of stuff. And the final thing, well, this is a man who is talking his own book here, is looking forward to a sort of cowboy capitalism, a horrible dystopia where we've got tourism and residential all blending as one. You know, I have big issues with Airbnb. I think they're a facilitator of tax avoidance. I think they are breaching planning laws, and most egregious of all, in terms of their life safety and their approach to it, I think it's cavalier, and I think, frankly, it's immoral. I really don't like it. If I want to let my house out on a short-hold tenancy, I have to have a gas safety certificate. If I let it on Airbnb, I don't have to have a gas safety certificate. There are other holiday rental companies insist on me having a gas safety certificate. Airbnb doesn't. It's wrong, and they need to be stopped from, you know, their behaviour. An area where I think COVID has genuinely created change is the notion of working from home. You could argue perhaps it's liberated us and given the cover for employers and employees to finally do what they've been wanting to do. But certainly I don't think without COVID we'd have seen this to the extent we have. This has led to suggestions of the death of the office. I think that's massively overdone. In the FT this morning, we've got the head of Brookfield making big bets on the office. I think the office is going to come roaring back. I think there will be a slight reduction in space, but I think, you know, I picked on CBRE here because I like this hotelification piece they included in there as a theme. This is the notion of having more sofas and more coffee bars and that kind of stuff in the office. But I think this does open up opportunities for branded hospitality options within offices. I had a few years ago now, I had Heron on a panel with me, and they had they were building an office tower, and they had a hotel component within that, and they were very excited about that because they saw it as providing an uplift to the value to those tenants within that tower. And I think there's going to be an interesting range of opportunities. We'll talk about those opportunities in a moment. How bad is it? Well, yeah, we know it's pretty bad. I know you have Kate Nichols, OBE, on your call, so I won't go through this. Just one thing I would say, I think as a sector, we need to be more optimistic. We need to be more assertive and confident in what we are. Stop asking for handouts, start asking for things which are going to make a difference to the future growth pattern of our sector. And in particular, what I'd like to see us doing is saying, look, build that third runway at Heathrow. Let's have one at Gatwick and Stansted at the same time. Do something about our nonsense border controls. Why are Indians having to fill in dozens of pages of forms to get a visitor visa for our country? This is nonsense. It needs to stop. This is where I believe our lobbying efforts should go. Slightly more controversial view. Another speaker you've had, I know, is Michael Grove from Hotstats. We did a report analysing, you know, what the climate was like for deals across Europe. I pulled these stats out. I mean, even when I look at them now, they're just astonishing. It's 4 to 5 times worse, this current situation, than all of these other traumas we've had. The net impact of this is going to be that we have very, very distressed balance sheets, the likes of which we haven't seen for some time. The worry, I think, from you know, if you're sitting there expecting your bank to be entirely supportive, I don't think they are going to be, and we're certainly not going to see the can kicking that we have seen in the post-2008 period. I think, and our conversations with the banks are they are going to be more assertive. They are more likely to pull the plug, and I think we're going to see a lot of that in this next year. I think we're going to see a lot of change. A lot of properties changing hands in the next year. I know of 3 major portfolios already in extensive discussions with the banks. It's going to be a tricky period. The good news is that prices are going to be holding up pretty well. There's an enormous amount of money on the sideline. So that big number there is all private equity. Of course, that's not everything directed at our sector, but there are billions and billions sitting there, have been raised to invest in our sector. This is going to mean assets are going to retain their pricing. I don't think we're going to see the 1990s style bargains. We will see a 1990s style set of transactions. So I think there's going to be very good deal flow over the next year or so. Yields, if anything, are going to head lower. This is my final slide. I think it's going to be a very tough time for the SMEs and independents. The simple fact is that the big guys have access to capital. They are able to raise equity. They are able to access debt far more easily than SMEs and independents. And the pain point is going to be most extreme with SMEs and independents. And I think these are going to be the big losers. If you look at, say, the Whitbread's latest trading update at Premier Inn, what we saw there was significant market share gains by Premier Inn. That's going to be at the expense of independents largely. Other losers, I think, now you can take a different view. There are plenty of other economists who think this is not going to be as rosy. I'm quite optimistic, but my belief is that losers are going to be the pessimists. Winners, well, we've already talked about the big brands. I think we're going to see significant consolidation in the sector. It was interesting, Morgan Stanley raised the rumour that broke out over the summer of a merger between Accor and IHG. Maybe, maybe not. I'm not hearing anything specifically. That's certainly the talks are underway. But I do think that some of these big global brand majors could well come together. Hyatt and Hilton is one of my favourites. Again, there's no concrete evidence that those discussions are underway. It simply makes logical sense for them to come together. We could see moves like that, but certainly in the next tier down from the global majors, the national branded chains, we're going to see consolidation there. And unfortunately, I think we'll see a number of the smaller businesses leaving the sector, simply going because of their capital constraints and their difficulties accessing capital. Other winners is this notion of flexible concepts. And what I mean by this is, I think the silos we tend to put our industry in. So we've got hotels, we've got student accommodation, we've got elder living. Well, there's going to be a cross-fertilization in all of these real estate sectors, I think, which are operational real estate. Just as you've seen when we talked about offices, the hospitality element creeping in there, we're going to see that within elder living, within student accommodation. You may have seen a week or so ago the $1 billion deal involving Ryan Prince of Realstar. So he's got this new concept called Uncle, which is co-living sort of small flats with shared space. So there's 8 units in the UK, 4 of which are branded Uncle. He sold off the real estate component to Quadreal, an investor, and they also took a stake in his management company. So it's very hospitality-like in the approach to it. We're going to see lots more stuff like that coming through, I think. Things like serviced apartments, extended stay, etc. There's a lot of interest around that. And finally, just, partly, what inflation, is it going to be a winner? I don't know. That's a thought. I don't think we'll see that this year, probably not next year, but that is a medium-term to longer-term issue. So there we go, just in time.
Well, you can carry on, Andrew. I think we're all fairly spellbound by your insight, which is incredibly helpful and really fascinating. And I've actually made about one or two of your comments about Airbnb, which I'm sure many of us would echo on the call. And there's been a lot of talk about the likely strength of the staycation market when restrictions are lifted. And I think it's, that's pretty obvious. What I'm more interested in is, do you see that being a sort of, a one-hit wonder in that, we'll have a huge boom this year and then everybody will sugar off overseas again next year in pursuit of the sun? Or do you think the staycation, staying closer to home, traveling less kind of view is likely to prevail for longer?
In aggregate, I think it's the former. I think there is opportunity clearly there. I think if you've got a more experiential offer, something which taps into the at the pinnacle of that Maslow's hierarchy, I think you've got a much bigger chance of hanging on to some of that custom. But we're in a we're sending out 100 million people and we're bringing in 50 million people. We can't send that 100 million out. So we've got this massive demand boost this year and probably some of next year as well. But the reality is when you look at, say, TUI, when they open up their planes, they fill them. And they've been filling them for May and June of this year. So the reality is the appetite is to go overseas still. I mean, I'm on my beach, but that is not very reflective of the weather in the UK, unfortunately. And there is still that that need for sunshine. I think is still going to be a key driver for that. I think there is opportunity to tap into this higher the sort of holidays where people are self-actualizing, where they're actually feel they're growing. And I think it's a hugely underestimated aspect of our industry. We tend to focus too much on the service element, not these other aspects. And one of the big successes of the Airbnb brand is that it's tapped into that and has been able to sell itself on that basis, this cultural piece. And we need, as in terms of a domestic industry, to really ramp that up and start. And if you look at one of the key features of Airbnb is this experience, the experiences offer they have, where it's a cooking thing or it's a horse riding thing or whatever it is. Tapping into that is going to is critical, I think, to making our domestic tourism offer succeed. We don't have the weather, sadly.
Thanks, Andrew. I mean, nice in many ways to hear a rather more optimistic view than many of the commentators who do seem to be ridden with gloom and doom. And I think to an extent you've probably sort of covered this, but there's been a huge amount of coverage about the number of businesses that are projected to fail. There are reports of 40% of the London hotel workforce having been laid off. What do you think the reality will actually prove to be?
I don't think it's going to be that kind of scale, but there will be significant closures. Again, the big units, they will keep trading, I think. You may see some repurposing, but not. There's such underlying momentum within our sector and demand that I really think people are going to take a look at this and say, look, this is crazy. We need to keep that. And you've got, in London, it's still very difficult to open a hotel. So in the big urban areas, it's still, the challenge is still there in planning, and you're not going to get around that easily. So if you've got an asset in a big urban centre, I think in most cases, it doesn't make sense to change the use out of hospitality. If anything, hospitality is going to benefit from the retail meltdown. And I think there's going to be a chance for hospitality to get in there to some of those units. Now, conversions are very tricky in retail, but there may be some a few opportunities around that. So in terms of, are the big units going to close? No, I think we will see a lot coming out at the bottom end. However, unfortunately, If you look at, say, the growth of the budget hotel market, I think that's quite instructive. So we've seen a few 100,000 rooms brought into the UK market by the budget hotel players, the economy hotel players, if you go on the STR ranking system. But the net supply in the UK is still hovered around that 700,000 room mark. What the reality is, that what's happened is the B&Bs, etc., have left the marketplace. So that's what's been going on. So though if you're talking about failures there, yes, it will. But I think we could well see a very rapid consolidation, particularly in the larger hotel units.
Thanks, Andrew. Just probably my last question. There are a lot of independent hotel owners on the call up and down the land. And many are in sort of rural locations and in coastal locations, and I think are hoping for a bit of a boom once restrictions are lifted. But taking a slightly longer view lens, do you have any particular advice for owners of these sort of properties?
Yeah, do something special and unique and make it an experience. That word experience is central to the future. You've got to deliver that. It's not enough giving comfort and hospitality. You've got to do something which delivers meaning for people and make it special. Now, what is it that's going to be special? How do you tie in the location? You've got to give somebody to go away from your property thinking, wow, I feel I've grown from having stayed there. A few years ago, I was at a panel, BDRC, now BVA, BDRC, they organized one of their panels where they had regular business travelers and regular leisure travelers, and they were millennials, the sort of 20 to 30 somethings. And it was fascinating even people who are going away for business were saying, I want to have an experience which enhances me. They were looking for that even when they were traveling for business. And I think that's so critical in terms of a successful offer going forward. You've got to focus on that and make that. Now, even if the kind of experiences you're doing, they're not profit centers. So you're doing horse riding, you're doing an art class, you're doing poetry readings, whatever it is, don't see it as a profit center. You've got to look at it in the round and in terms of that of your overall offer, but focus on that. And that is something which is going to be it's so hard for the big guys to emulate, that they can't do that individualization, that personalization to the degree that that a small owner operator can. That has to be the focus for success.
Thank you. Sorry, having said that was the last question, just one other. I'm conscious we're over time, but it's so valuable having you there. Stuart Broster asks, does Andrew think there will be more direct bookings and the OTAs will come under greater pressure? What's OTA land going to do?
Yeah, it's a very good. So historically, what we've always seen is the OTAs win out in a time of pressure, but this is a very unusual recovery and a very unusual recession. The signs so far are that direct booking is actually winning out. It's interesting. If you look at what the markets are saying, so the share price of Booking and Expedia have gone back to pre-COVID levels. The share prices of IHG and Marriott haven't. So the markets are clearly looking at it in one way. Personally, that might be a misread there. I think there does seem to be signs that this is going to be different this time around. A famous deadly words for an investor to make, but it does look like direct booking is stronger. Because the localized nature of demand, you're able to reach out and tap into that. Whereas historically in a recovery, we've always been desperate for any sort of new sources of revenue. We and if there's no hope, if you're a hotel in the Lake District reaching out to Thailand and that Thai traveller, but you have to go via an OTA or similar to get those customers in. It's just not economically feasible to target those customers directly. But because we've got quite localized demand, I think we're much more able to target guests. So I think maybe there's a factor in there. I don't think, frankly, you're going to be able to write off the OTAs. Sadly, they are a feature. They will gather in strength, but I think we're much more sensible in terms of how we approach that. I mean, and just very broadly on the OTA piece, we have come a long way. So if we look at the 9/11 crash, we were spending 30-40% in terms of commission levels back then. That was the merchant model. We were handing over inventory. We didn't know how to sell it. They put it online and sold it for us at enormous commissions. We switched into the agency model that heralded the rise of booking. That brought that commission level down to the 20%. We're now in the very low teens. Certainly, even quite small chains I've talked to are achieving 11-12% in terms of their commission levels. Marriott reportedly negotiated a deal with Booking in the US to pay just 8% commission. So there is huge pressure still on those commissions, and that pressure will stay there, I think. The good news about Airbnb is that it's another platform that's in the marketplace, a strong platform. It's a challenge, and that is causing pressure on those commissions. So I don't see those commission levels going up. So if you handle the OTAs right and use them and exploit them how they should be exploited to tackle those Thai travelers, for example, we're in a lot better position to sort of control them a bit and keep them in their box, I think, as an industry. They're going to continue making more money out of the industry than the hoteliers will, sadly. But I think that we can actually stop them overrunning the whole industry and completely commoditizing what's going on in the sector.
Andrew, thank you so much. We are a few minutes over time, so we'll need to sort of draw to close. But your insight is extraordinary and incredibly helpful, and very nice to have a slightly more upbeat view of life. I suspect there may be one or two people who would like to talk to you further and may want to draw data from you at Hotel Analyst. Are you happy for me to circulate your email address? We
of course,
send an
it's publicly available. I mean, it's I'm a journalist that doesn't. It's not much of a journalist really, but yes, totally.
Great. Well, listen, thank you so much. Massively appreciated and really interesting and insightful. So just to draw to close, just to let you know that next week, our guests are Alistair Carmichael, MP, and that's MP, not MSP. But he is actually the MP for Orkney and Shetland and has been since 2001, but obviously sits at Westminster. And amongst other things, he's the Liberal Democrat Home Affairs spokesman, and has a particular interest in the hospitality and leisure sector. And we will also be welcoming back Paul Charles. Paul is a commentator on the international travel market, which has clearly been in the press a lot recently and has been leading the Quash Quarantine campaign. So Paul's agreed to come back to give us a further update as well. So I hope as many of you as possible will come back and join us next week for what will hopefully be another interesting session. Thank you again, Andrew. Thank you again to Sonia Campbell in absentia, and thank you to Billy McNeil for your input as well. We will circulate all the usual information after the session. Everybody else, stay well, stay safe, stay out of trouble, and we'll look forward to welcoming you back next week at 10 o'clock in the morning. Don't be late. All the very best. Take care.
Bye, Roddy. Thanks very much.
Great pleasure, Charles.
Cheers, Roddy. Thanks
Great
very
pleasure.
much. Thanks very much, Roddy.
Thanks, Roddy.
No, great pleasure.
Thanks, Roddy. Thanks very much.
Thanks, Roddy.
Great pleasure, Billy.
Good. Yeah. So I messaged Alan. We'll have a chat this afternoon.